Good evening, everyone. Please confirm if I'm audible to all of you. Abin, Sania, Aman, Mariam, Ayan.
Yes,
Yes, sir.
yes, you're audible.
All right, thank you so much. Okay, everyone. So in the previous class, we finished death of partner, and I have given you one question for your homework. I'm sure that all of you must have done that question. Anybody have any problem regarding the question that I gave as a homework? Anybody want to ask anything relating to the question that I gave you as homework? Anybody want to ask anything?
No, sir.
No doubts. All right, then. So let's continue with a new topic. So today we'll be talking about the dissolution of the partnership firm. And as usual, we will first of all start with the meaning of the dissolution, and then we will discuss the other topic relating to this particular topic. So first of all, what is the meaning of dissolution of a partnership firm? Just a minute. Just a minute. All right, everyone. So first of all, let's start with the meaning of the dissolution of partnership firm. So dissolution means discontinuing the operation of the business. When partners have decided to end the firm or discontinue the operations of the firm, discontinue the operation of the firm, then it is called dissolution. All right, so dissolution is basically a situation wherein partners have decided to close the close the operations of the firm. Meaning that all the partners have mutually agreed upon discontinuing the operation of the firm. Partners have decided to terminate the partners have decided to terminate the firm terminate the firm, or you can also call partners have decided to end the firm, close the firm. This is called dissolution of partnership. Now, whenever a firm is closed, it had under the situation of dissolution of a firm, as per the Partnership Act, there is a specific act which talk about the dissolution of a firm, which is known as Indian Partnership Act 1932. So, as per Indian Partnership Act, just a minute, Indian Partnership Act 1932. First of all, Indian Partnership Act 1932 explain the meaning of dissolution, wherein it says that dissolution of a firm means the termination of a partnership among all the partners of the firm. That means when all the partners have decided to discontinue the operations of the business, that is called the dissolution of the firm. Nobody is interested in continuing the continuing the firm. If all the partners mutually agreed upon ending the operation of the firm, that is called dissolution. This is what Indian Partnership Act 1932 says. And Indian Partnership Act 1932 also talks about that whenever a firm is dissolved, in such a situation, all the assets of the firm are disposed of. All the assets of the firm, just a minute. In case of dissolution, in case of dissolution, what is to be done? Firstly, all the assets are to be disposed of. Assets are disposed of basically means are sold off. Disposed of. All the assets are sold in the market, and whatever the realizable value of that is recovered. So when firm have decided, when partners have decided to end the business of the firm, then in such a situation all the assets will be sold out. That means all the assets must be disposed of. Number one, if it is realizable, obviously, if it is in a position to resell, if it is realizable, if it is realizable. So all the assets are to be disposed of or sold out in the market if it is realizable. Secondly, we need to pay off the liabilities as well. Pay off the liabilities of the firm. Unless and until you pay off the liabilities of the firm, you won't be able to wind up the firm. Dissolution is what? Dissolution is that partners have decided to wind up the operation of the firm, but the Indian Partnership Act 1932 makes it compulsory for a dissolving firm to pay off its existing liabilities. All right, all the liabilities must be paid off, like all the liabilities, including the partner's loan, internal and external liabilities, both should be paid off. Partner's loan, right? And partner's capital account, partner's capital, all these should be paid off. All right, so this is what we call dissolution. Dissolution, let me give you a quick recall. Dissolution basically means discontinuing the operation of the firm or terminating or ending or closing down the business. As per the Indian Partnership Act 1932, whenever a business is being dissolved, whenever a firm is being dissolved, we need to dispose of the asset and pay off the liability of the firm, including the partner's loan and partner's capital. All right. So let's look at the formal definition of the dissolution as per the Indian Partnership Act 1932. And I want all of you to write this down. See, this is what Indian Partnership Act 1932 explained dissolution. As per Indian Partnership Act 1932, dissolution of a firm means termination of partnership among among all the partners of the firm. When a firm is dissolved, the business of the firm terminates. Number one, business of the firm terminates. That means firm will no more be doing the same business anymore. And all the asset of the firm are to be disposed of. Secondly, all the liabilities, outsider liabilities plus the internal liability. I mean, the liability of a firm towards the partner. That is partner's loan and partner's capital should also be paid off. All right, everybody, is this clear to all of you? Yes or no?
Yes, sir.
Yes.
Okay. So this is what dissolution of firm basically means. Everyone, please write this down quickly. Let me know whenever you are done, and then we will move to the next slide. Done, all of you? Just let me know whenever you are done writing this.
Done, sir.
All right. So until now, we just discussed the meaning of the dissolution, where I just explained that dissolution is basically discontinuing the operation of the firm. When all the partners have mutually decided to discontinue or end the operation or close down the business, this is what we call dissolution of a firm. And as per Partnership Act 1932, Partnership Act 1932 makes it compulsory that in case of dissolution of the firm, all the assets of the firm must be disposed of and all the liability must be paid off. All right. And now let's move to the accounting aspect of dissolution. See, as far as the dissolution is concerned, in case of dissolution, we need to prepare three accounts. We need to open three accounts. Whenever a firm is for partners have decided to discontinue the operation of the firm, we need to prepare three accounts, including realization account, partners capital account, and the cash or bank account, depending upon the situation, whatever the question require. If question requires us to prepare the cash account, then we will prepare the cash account. Otherwise, we will prepare the bank bank account. Just a minute. So basically, in case of dissolution of a partnership firm, we need to prepare the realization account, partners capital account, and the cash account. These three accounts needed to be prepared. Got it, everybody? Please note this down as well. In case of the dissolution, we need to prepare these three accounts. In today's session, we will be talking about the preparation, the formation of the realization account only. We won't be able to cover the other two accounts, partners capital and the cash bank account. We'll talk about it later in the next session, but in today's class, we will be talking about the realization account. We'll discuss how do we prepare realization account, what is the format of the realization account, what items are taken into consideration while preparing the realization account, and so on. And we'll try to do one question based on the same as well. But first of all of you, please note this down quickly.
Done, sir.
Done, sir.
Done, everybody? Okay.
Yes, sir.
Okay, let's first of all talk about the realization account. I want all of you to put this heading on your notebook. Put the heading on your notebook, realization account. Formation of realization account. Formation of realization account. See, in order to prepare the realization account, we need to understand few things first about the realization account. There are certain things that you need to remember while preparing the realization account that I'm writing down here, and I want you to note that as well. Formation of realization account. All right. First thing that you need to remember while preparing the realization account, that whenever you prepare realization account, make sure that you transfer all kind of all assets. So if you need to first of all transfer all the asset on the debit side of the realization account. See, whenever we will solve any question, there will be a balance sheet given in the question, and in the balance sheet, as you know, we have the value of the assets and the value of the liabilities as well. So while preparing the realization account, what do we need to do? We will first of all transfer all the asset like the building, furniture, stock, debtor, all these items of asset need to be transferred to the debit side of the realization account. You need to remember this. Let me write this down. Transfer, the first thing that we need to do, is transfer all assets to the debit side of realization account. All right, but excluding following, there are certain items of assets which won't be transferred to the realization account, even though those items are asset, but still we won't be transferring it to the realization account debit side. What are those items? Those items include cash account balance, bank account balance, cash balance, bank balance, then any kind of loss, such as uh, debit, sorry, any kind of loss, profit and loss account debit balance. See, debit balance or profit and loss account basically indicate loss. So loss won't be transferred to the realization account, and advertisement expense, advertisement expense or advertisement suspense account, then miscellaneous expenses. All these items are generally recorded on the asset side of the balance sheet, but make sure whenever you prepare the realization account, you won't be transferring these assets to the realization account. We won't be transferring these assets to the realization account. Number one. Second thing that we need to do, since we have transferred all the asset to the debit side of the realization account, now the question arises, what about the liability of the balance sheet? Now here comes the point. We need to transfer all the liability also. Transfer all liabilities to the, any guesses on which side of the
Credit side.
realization account? Yes, to the credit side. Of realization account. You guys are writing this, na?
Yes,
Yes.
sir.
All of you?
Yes, sir.
We need to transfer all the liabilities on the credit side of the realization account, but excluding following. There are certain items of liability which won't be transferred to the realization account. All right, but excluding following. What are those items? Those items are, see, you will have to remember all these points, otherwise you won't be able to prepare the realization account properly. So we won't be transferring the partner's capital account, partner's capital account balance. Then we won't be transferring the partner's loan account. See, all these are generally recorded on the liability side of the balance sheet, but even though these are liabilities, still we won't be transferring it to the realization account credit side. Apart from the partner's loan account, we won't transfer any profit and loss account credit balance. That means any kind of profit won't be transferred to the realization account credit balance. Then any kind of reserves won't be transferred to realization account, and in it all, a workman compensation reserve won't be recorded in the workman compensation reserve. Won't be recorded in the realization account credit side if there is no claim. If there is a claim, then we will record such workman compensation. If there is no claim against workman compensation, I hope you understand the meaning of the claim here. If the claim is not there, then we will be showing it to the showing it in the realization account credit side. Otherwise, we won't be showing it in the realization account. If there is no claim, we won't be showing it in the realization account. All right. So these points you have to remember while preparing the realization account. Apart from this, let me also write down. So if partners capital account or partners loan account, P&L reserve, workman compensation, if all these items are not to be recorded on the credit side of the realization account, how do we treat these items? So what we will do, we will be recording these items. See, if we talk about the, first of all, if we talk about the partner's loan account will be transferred to cash or bank account bank account. Partner's loan account will be transferred to which account? Cash or bank account credit side, cash account. Or if we are preparing bank account, in that case it will be transferred to the bank account. And on which side? On the credit side. There's one more point. Partners capital account, partners capital account, right? This partners capital account and profit and loss account, reserve, or workman compensation, all these items will be transferred to partners. All these items will be transferred to partners capital account credit side. Partners capital account, reserve, profit and loss, credit balance, obviously credit balance, workman compensation reserve will be transferred to credit side of partners capital account. All right, everyone, is this clear to all of you? So we
Yes,
need
sir.
to keep that these 4 points in mind while preparing the realization account. First thing that I just told you, that whenever we prepare the realization account, we need to transfer all the asset first of all on the debit side of the realization account, excluding the cash, bank, loss, advertisement expense, miscellaneous expense. Secondly, we need to transfer all the liabilities to the credit side of the realization account, but excluding the following, such as partners loan, partners capital account, profit, reserve, workman compensation. Then partners loan will be transferred to the credit side of the cash or bank account, depending upon whatever we are preparing. And partners capital account, reserve, profit, workman compensation will be transferred to the credit side of the partners capital account. I hope all these points are clear to you. Now we will talk about the format of the realization account. How do we actually prepare the realization account? You need to draw the format. This is very, very important. Format. So this is how we prepare realization account. Firstly, name of the account will be written realization account. And just like any other account, it will also have two sides, debit and the credit side. As usual, this is the credit side. This is the debit side of the realization account. Just a minute. All right, all of you. Now see, the first thing that we need to do, as I just told you here in the first point. First of all, what do we need to do? We need to transfer all the assets of the balance sheet on the debit side of the realization account. So whatever the assets there in the balance sheet, we will first of all transfer it to the realization account like this. We'll first of all put the heading as two sundry assets. Two, so if there are two or more assets, then if we are transferring two or more assets, then we will put this heading two sundry assets, and under this heading we will write down all the value, all the assets that is being transferred from the balance sheet to the realization account. Sir, asset, what are the assets? Such as debtors, right? If there are any bills receivable, if for example if there are any investment, all these are what? These are all assets. Na? We will transfer all of these things. Building, any kind of asset, goodwill. All right, and there could be any other asset as well, like furniture, any asset, whatever the asset given there in the balance sheet, we need to transfer all the asset here, excluding the asset that I just wrote above, excluding cash, bank, PNL, advertisement, suspense, miscellaneous expense. All these are not to be transferred to the realization account debit side. Apart from these assets, we will transfer all the assets. After writing down the value here, we will total the value of all the things, and then we will write down the final value in the amount column. All right, then we need to transfer all the liabilities. So we'll write down by sundry liabilities. And here we'll first of all write down all the value of the liability, like the creditors, if there are any, then bills payable, if there are any, then if there is any outstanding rent or any kind of liability, excluding the items that I wrote above, outstanding rent or employees provident fund, all these are what? All of these are employees provident fund. All of these are liabilities, right? And if there are any other liability like the investment fluctuation reserve, there is also a liability. Then if there are any provision for doubtful debts, provision for doubtful debt, all these need to be transferred here. And then we will total the value of all the liability and write it into the final column of the amount. All right. Is it clear, everybody? Till this point, any doubt? Is it clear to all of you? Yes or no?
Yes,
Yes,
sir.
sir.
Okay.
Yes, sir.
All right. Now what happens now? Sometimes the assets are when we close down the business, we sell certain assets. If any assets being sold, then obviously we will realize some amount by selling such assets. Like let's suppose if we sold the value of the if the let's suppose the value of the building was 5 lakhs, for example. It is possible that at the time of closure of the business, we might sell the building at rupees 4,50,000, assuming. Then such value will need to be shown in the realization account as well. If any asset is being realized means if any asset is being sold in the market and any amount is being realized on account of sale of such asset, then such amount should also be reflected in the realization account. The question arises, on which side of the realization account we will write down the realizable value of the asset. So answer is on the credit side. So if we are selling any asset and we are receiving any cash or bank balance, then such realizable value need to be recorded on the credit side of the realization account. So it will be shown like this. We'll write down by cash if we are receiving cash, or if we are receiving bank, then we'll write down bank account, right? And write down the value of the assets being realized. If assets realized or sold in the market. Assets realized. Like for example, if we sold the value of, if we realize by selling the building of the firm, then whatever the value that we realize on account of sale of the building, such value will be recorded here. If we sold debtors, right? If we sold bills receivable, so any realizable value of the assets need to be recorded here. Mostly these items are given there in the question. All right. So all these things will be recorded here. I'm not saying that only these three items will be recorded on the credit side, building debtor. There could be any other item as well, like the goodwill, investment, or any other value. The thing is that if we are in a position to realize some amount by selling of the asset, then such realizable value, which is coming in the form of cash or bank, need to be recorded on the credit side of the realization account. I hope this point is clear to all of you. Tell me if it is clear or not.
Yes, sir.
Yes, sir.
Okay. Then similarly, it may be possible that there are certain liabilities which is being paid off. If liabilities are being paid off, then such liability, the payment of such liability need to be recorded on the debit side of the realization account. Like for example, if the value of the creditor is at rupees 10,000, and if we are closing down the business, it is as per the Indian Partnership Act 1932, and it makes it compulsory for the partnership to pay off the liability at the closure of the business. So such liability need to be paid off. If any liability is being paid off, then such payment need to be recorded on the debit side. Let's suppose if we are paying off the value of the creditor, then such liability will be recorded here on the debit side. If we are paying for the bills payable, then such amount will be recorded on the credit side. If we are paying any outstanding rent or any other liability, such item need to be recorded on the debit side of the realization account. Apart from the liability, apart from the payment for the liability, if we have incurred any expenses relating to the dissolution of the firm, so all realization related expenses, since business is closing, we are closing down the business, so there is a possibility that at the time of closure of the business we might incur some extra expense just to close down this business. So all realization related expense, all expenses relating to dissolution need to be recorded here in on the debit side of the realization account. All right, and after this we will total the value whatever the payment that we have made and write it into the final column of the realization account. I hope this point is also clear to all of you. Got it? Is it clear to all of you?
Yes, sir.
Yes,
Yes.
sir.
Okay. And there might be a possibility that certain assets is being taken over by the partner itself. Like businesses, we are closing down the business and one of the furniture is being taken over by the partner himself. He do not want to sell it to the market, sell it in the market. Instead, partner want to take over such furniture. It is possible? Yes or no? Yes. Like for example, this furniture, the value of the furniture is 5,000. Now one of the partners have decided to took over the furniture. Since the business is closing down and he is interested in taking over such furniture. So if partner is acquiring any asset, then we will write down by partner's capital account. Such amount need to be debited to the partner's capital account. Partner's capital account. Like for example, if partner is taking over the furniture of the furniture of the firm, it need to be reflected by the name of such partner. If let's suppose Mr. X is taking over the furniture, we'll write down by X capital account. That means X capital account will be debited by such amount. And let's suppose if he's also taking over the goodwill of the firm, then also his account will be debited by such amount. Got it? All right, everybody, is this clear? Yes or no?
Yes, sir.
Okay. Then one more point. There is also a possibility that instead of the liability being paid by the firm, there may be a possibility that one of the partner have decided to pay off the liability of the firm personally. If partner have decided to pay off the liability of the firm on his own, like for example, one of the liability by the name of employees provident fund, firm is not making any payment towards the employee provident fund. Instead one of the partner have decided to pay off the employees provident fund. This is a liability, right? And this liability is a partner, one of the partner have decided to pay off this liability. So then such partners capital account will be credited. So to partners capital account, we'll write down two part. If any liability is being paid off by the partner himself, then partners capital account will be written on the debit side. If liability is being paid off, so we'll write down, like for example, if employees provident fund is being taken over or paid off by the one of the partner, employees provident fund, EPF, EPF, right? Got it, everybody? This is how we prepare the realization account. This is the format of the realization account. So this is the first step. We first of all write down the all the value of the asset on the debit side. Then secondly, we'll write down all the value of the liability on the credit side. Then if any amount is realizable from the sale of the asset, then such realizable value will be recorded here on the credit side. Again, third transaction, third point. Then if the liability is being paid off by the firm, then such payment will be recorded like this to cash or bank. And if any liability is being paid by the partner himself, then such item will be recorded like this to partner's capital account. If any asset is being taken over by the partner himself, then this is how we will show it. Got it, everybody? Is this clear to all of you? Yes or no?
Yes,
Yes,
sir.
Okay, now finally, one last step is still left. Since we have recorded all the item and because it is an account, so we need to tally both the sides now. So at the end, what do? We will total the credit side and debit side. And let's suppose if the credit side is greater than the debit side. Like for example, if the credit side balance is 5 lakh, right? If the credit side balance is 5 lakh and debit side balance is 4 lakh, sorry, 5 lakh, and debit side total is 4 lakh. So after subtracting 4 lakh out of 5 lakh, there will be 1 lakh of profit. So if there is any profit, such profit will be recorded on the credit side to, sorry, debit side of the revaluation account to profit transferred to this profit will be transferred to the partners, right? X, Y, or Z, whoever is the partner. And like for example, if the debit side is greater than the credit side, then this situation indicate that there is a loss. And if there is any loss, we will show such loss on which side? By loss will be shown on the credit side of the
Credits.
revaluation account. Yeah,
Yeah.
by loss being transferred to X, Y, or Z, whoever the partner is. This is how we prepare the realization account, and at the end, both the sides should obviously tally. Done, everyone? Is it clear to all of you? Everybody written this down? Anybody want me to scroll up or down to any specific segment of the format? Is it clear, all of you?
Yes, sir.
Anybody want me to explain anything? All right. Since all of you have written this down and nobody have any question relating to this, just want to add one more point. See, this realization expense being paid by the firm, it is also known as dissolution expense. Instead of realization expense, it is also known as dissolution expense or winding up expense. I hope you understand this point. Instead of realization expense, it may be given in the question by the name of dissolution expense or realization expense or the winding up expense. So in every situation, it is known as the realization expense. I hope it is clear to, it will be written here on the debit side of the realization account. Got it, everybody?
Yes, sir.
Okay, so shall we start with the question? Let's do one question based on the same concept. Okay, just a minute. All right, let's start with this question. See, this question says that Ramesh and Umesh were partners in a firm sharing profit in the ratio of their capital. On 31st of March 2013, their balance sheet is given as. In the balance sheet on asset side, you can clearly see there are certain item, bank, debtor, stock, furniture, machinery, and Umesh current account balance is given. And then we have creditor, compensation, general reserve, Ramesh current account, capital, and all of these items are there. All right. The question talks about the preparation formation of the realization account only, and it gives us few adjustment in the question. It tells us in point 8 says that Ramesh took over 50% of the stock at rupees 10,000 less than the book value. So Ramesh is taking over the stock. So the stock is what? The stock is one of the asset that Ramesh have decided to take over. The remaining stock was sold in the market at a loss of rupees 15,000. Debtors were realized at a discount of 5%. Okay, furniture was taken over by Umesh. Machinery was sold for rupees 44 lakh 50,000. Creditors were paid in full. There was unrecorded bill for repairs for rupees 1 lakh 60,000, which was settled at rupees 1 lakh 40,000. Okay. All right. So these all these items, all these information is given. We need to prepare the realization account. All right. All of you, let's start with the solution. Everybody understood the question?
Yes, sir.
Okay. So see, first of all, I want all of you to start with the format of the realization account quickly. We'll write down realization account here. Okay. So just a minute. All right. So first thing that we need to write in the realization account is we need to transfer all the asset side item on the debit side of the realization account, right, everyone? First thing that we need to do is write down to sundry assets. We'll write down all the items here. Just a minute. So value of the debtors is there in the balance sheet. Debtors. Look at the value of the debtors. Debtor is given as 2,40,000. We won't be transferring the bank balance into the realization account, right? This item won't be transferred to the realization account. Yes or no, everybody? Everybody understand this point? Na? Bank is not going to be transferred to the realization account debit side. Yes or no, everyone?
Yes, sir.
Yes.
So we won't be transferring this. We will start with the debtors. So debtors will be transferred to the realization account, and The value of the debtor is 2,40,000. Apart from debtors, we have stock as well. Stock, the value of the stock is given in the question as 1,30,000. So 1 lakh. $1,30,000. Then furniture is also there. Furnitures. It was valued at 2 lakh currently. Then machinery. Machinery is valued at 9,30,000. All right, now we will total all these value of the asset. Totaling it, we will get 240, 130, 3,70,000. Okay, and 5,70,000, 6 lakh, 15 lakhs. All right, now we will transfer the value of the liabilities to sundry. Liabilities. And sundry liabilities include, see, on the liability side, we have creditors, then workman compensation reserve. So anybody please tell me whether we should transfer the workman compensation reserve as well? Yes or no? Tell me, yes or no? Whether we should transfer the workman compensation reserve, general reserve, yes or no?
No.
No, we won't be transferring it, right? So on the liability side, we will have only how many items? We will write down only one item, right? Creditors is there only. So I'm not going to write down two sundry liabilities because only one item is to be written here. So by creditors, value of the creditor is 1,70,000 as it is given in the question. All right, everyone. Got it? Is this clear?
Yes, sir.
Okay. Now, question. Let's read the adjustment given in the question. See, it says that Ramesh took over 50% of the stock at rupees 10,000 less than book values. 50% of the stock at rupees 10,000 less than book value. Now, first of all, tell me what is the total value of the stock? Total value of the stock is
1,30,000.
1,30,000. And Ramesh is taking over the 50% of the stock, right? That
Yes.
means around 65,000 of the stock is being taken over by the Ramesh, yes or no?
Yes, sir.
But at a price less than at a price at rupees 10,000 less than the book value. That means 65,000 minus 10,000. That means Ramesh is taking over the stock at rupees 55,000 only. Got it?
Yes.
Yes.
Yes. So this is how we will be writing it. We'll go to the realization account and we'll write down by Ramesh account. Ramesh account, right? Ramesh account. And the value of the 50% of the stock is being taken over. 50% of 1,30,000 less 10,000. So it will be 55,000 only. Okay. Moving on to the next. It says the remaining part of adjustment A says remaining stock was sold at a loss of 15,000. Now tell me what is the remaining amount of stock? Remaining amount of 50% is taken over by Ramesh, then 50% is still there. Yes or no? And the value of the 50% remaining stock is how much? 65,000. Yes or no?
Yes.
Everybody,
Yes,
do I
sir.
need to explain this point? Okay, see, this is how we'll, let me show this. Total value of the stock was 1,30,000. 1,30,000, yes or no? 50% is being taken over by Ramesh. That means value of stock, the value of which was 65,000 was taken over by Ramesh at 10,000 less than the book value. That means Ramesh actually took over the stock at rupees 45,000 only. Now, what about the remaining stock? 50% is still there. The value of the 50% stock is 65,000 again. It is being sold in the market at a loss of 15,000. Loss of 15,000. That means we must have sold the stock at rupees 50,000 only. Yes or no?
50,000.
Yeah,
So
this is the realizable value. And whenever we sell the asset in the market, how do we record that in the realization account? On which side of the realization account we need to show it? Whether on the debit side or the credit side? And by what name it will be indicated in the realization account? Anybody please tell me.
Credit side
by loss transfer.
partly.
Sorry?
So
On the credit side
yeah, on the credit side.
by cash. For the asset being realized. Assets realized. Right? So we are able to realize the stock up to rupees 50,000. Got it? Is it clear to everyone? Apart from the asset, I think we are selling few other asset as well. Apart from the stock, we are selling other asset as well. Like the debtor is also realizable at a discount of 5%. Currently, debtor is 2,40,000. So if it is we are able to realize it at a discount of 5%, that means 2,40,000 minus, tell me, 5%. So how much is 5% of 2,40,000? Tell me anyone. Let me write this down. Debtors. Debtor value which is 2,40,000. It is being realized at a discount of 5%. We'll reduce 5% out of it and write down the remaining value here. Let me calculate that. Just a minute. 2,40,000 minus 5%. So realizable value will be 2,28,000. 40% is 12,000. All right, everyone, 2,28,000. This is the realizable value of the debtors. Got it? Is it clear? Yes or no?
Yes, sir.
Okay. Moving back to the question. Apart from the debtors, in the adjustment B, it says furniture was taken over by Umesh. Furniture was taken over by Umesh for rupees 50,000. Well, we need to write down the name of the Umesh as well. So we'll write down Umesh. Just a minute. By Umesh account, right? How much? He is acquiring the furniture for rupees 50,000. 50,000. Got it, everyone? Is this clear? Yes or no? Tell me if it is clear, everyone. Everybody, is it clear? Yes or no?
Yes, sir. Clear, sir.
Yes, sir.
Okay. Then, apart from furniture being taken over by Umesh, in the adjustment B, it also talks about the machinery was sold for rupees 4,50,000. So the realizable value of the machinery is 4,50,000. I need to write it here. Machinery under by cash. 4,50,000. All right. Moving on to the next adjustment. It says creditor were paid in full. What was the value of the creditor? Anybody? Value of the
The
creditor was
1,70,000.
correct. It is being paid in full. So where
Yes.
do we need to record? Where do we need to show it? in the realization account, on the debit side or the credit side?
Sir, on the debit.
On the debit side, by cash is being paid for liabilities, 1,70,000. Okay. Then there was unrecorded bill for repairs, rupees 160,000, which was settled at rupees 1,40,000. So there was one unrecorded bill which was not earlier recorded. We will be paying for that bill. The value of the bill out that will be considered as the outstanding bill. Bill, the payment of which is not yet made, will be considered as the outstanding bill, right? So the payment due is actually 1,60,000, but we are settling down this liability by paying 1,40,000 only. So we'll write that down as well. We'll write down outstanding bill. All right, and the amount will be 1,40,000 instead of 1,60,000.
Sir,
I
can
hope
you
this point.
use that calculator?
Oh, just a minute. Better
Thank
now?
Oh, yes, sir. Thank you.
Okay. Then coming back to the question, I think we have recorded everything here. I don't think any other item is left to be recorded. Right, everyone? We did everything?
Yes, sir.
Yes. Now all we need to do, just total the debit side and the credit side, and need to determine which side is greater than which side. And accordingly, we will find out the profit or loss. Let me just total all these value first. This will be 170 plus 140 or 3,10,000. Just a minute. And totaling this, we will get 50 plus 4, 50 plus 2, 28. That will be 7,28,000. All right, everyone. Is it clear to all of you? Now, see, totaling the debit side first. We have.
Sir, we are not able to see the solution because the question is.
Okay, question is written here. See, I just total both these value. We got 3,10,000 here, and by totaling all these value, we got 7,20,000 here. All right. Now we will total both the sides, and as you can see, the debit side in this case is greater than the credit side. Totaling 15 lakh plus 3,10,000, we will get 18,10,000. And out of this, we need to subtract 170, 55, 720, 7,28,000 and 50,000. I think debit side is greater than the credit side. And if debit side is greater than credit side, what we will have? We will have a profit or a situation of loss. Tell me. We will have a profit or loss. Tell me, guys, what happened? Debit side is greater than the credit side. Profit or loss? No answer. Everybody
So
able
loss.
to
Loss.
recall the format? See, if the debit side is greater than the credit side, we will have a loss. So we have a loss in this case of what amount? By loss. Loss is of rupees 8,07,000. 8,07,000. And we will transfer this loss to the partner. Who are the partner? Umesh and Ramesh were the partner. Na? So Ramesh capital account will be debited and Umesh capital account will be debited. Right? And we will distribute this loss among the partners in their profit sharing ratio. Let me just calculate it. Just a moment. Okay, question. In the question, profit sharing ratio was given. It says that they were sharing the profit and losses in their capital, in the ratio of their capital. So what is the capital? What is their capital ratio? This is their capital ratio, 7:3. 7:3. So we will distribute the loss in the ratio of 7:3. And by doing this, we will get, just a minute, let me calculate. 8 lakh, 8 lakh, 7,000 into 7 by 10. So it will be, just a moment, 5,64,900 for Umesh and 2,42,100 for Umesh, Ramesh and Umesh. And totaling it, we will get 8,07,000. All right, this is how we will prepare the realization account. I hope this is clear to all of you.
Yes, sir.
Clear, everyone?
Yes,
Yes.
sir.
All right, so this was all about the realization account. We did one question today. Let me just give you a quick recall of this topic. We started this topic with the meaning of the dissolution, wherein I have told you that dissolution is nothing but the discontinuance of the operation of the business by all the partners. When all the partners have decided to terminate and close down the operation of the firm, that is considered as the dissolution. And as per the Partnership Act 1932, whenever we are dissolving a firm, we need to dispose of the asset and pay off the liability. Unless and until we do this, we won't be able to dissolve the partnership. And in order to dissolve the partnership, from the accounting point of view, we need to prepare three accounts: realization account, partners capital account, and the cash account or bank account, depending upon the question. And today we just talked about the formation of the realization account, wherein I have told you that realization account, in order to prepare the realization account, what do we do? We need to consider these 4 points. Firstly, we need to transfer all the asset on the debit side of the realization account, excluding the cash, bank, profit and loss, advertisement expense, and miscellaneous expense. And then after doing this, we will transfer all the liability of the credit side to the credit side of the realization account, but excluding partners capital account, loan account, PNL reserve, and workman compensation reserve. After that, partners loan account will be transferred to cash or bank account on the credit side, and partners capital account, reserve, and PNL and workman compensation reserve will be transferred to the credit side of the partners capital account. Then we learned about the format of the realization account, and after that we did one question based on the same. I hope everything that we discussed in today's class is clear to all of you. And I'm giving you one question for your homework as well. Just a minute, just take the screenshot of this question. All right, take the screenshot of the question. I want you to try this question. However, this question is little different and a little difficult comparing with the previous one, but it is not too difficult. I hope if you will try this question, you will be able to solve it. I just want you to try this question. Otherwise, if you are not able to solve and find the correct answer, I'll be doing this question for you in the next class. All right, everybody, is it clear to all of you?
Yes, sir.
All right, everyone. So this is it for the today's session. Thank you so much, everybody, for joining. We'll see in the next class. We'll do a few more questions based on the resolution and discuss few other topics like the partners capital account and the cash or bank account as well. So this is it for today's class. Thank you so much, everybody. We'll see you in the next class. Till then, take care. Goodbye.
Thank you, sir.
Most welcome.